In the historic halls of Lancaster House, London, US and Chinese officials gathered for 2 days of high-stakes trade talks. The summit followed a recent Trump-Xi phone call that briefly eased tensions, but the world is watching for a real breakthrough. The US team, led by Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick, arrived determined to reshape trade terms with China. Across the table, Vice Premier He Lifeng and his seasoned Chinese delegation were equally prepared for tough negotiations. After 12 hours of talks, no resolution was reached, leaving the hardest issues for the final day. This neutral London setting was chosen to reduce political pressure, but the stakes, global supply chains, tech dominance, and economic stability couldn't be higher. The outcome will ripple through international markets, affecting businesses and consumers worldwide. At the core of the talks, rare earth minerals, tariffs, and technology. The US wants China to lift export restrictions on rare earths, vital for everything from smartphones to defense systems. China, in turn, demands permanent tariff reductions, using rare earths as leverage. Both sides are also locked in a battle over high-tech exports, chip-making software, jet engine parts, and more. For China, access to US technology is key to its ambitions. For the US, export controls protect its edge. This isn't just about trade deficits, it's a fight over who leads the next wave of innovation. As experts note, these negotiations will define the rules of the 21st century economy. Every move is a play in a much larger geopolitical chess game. Wall Street's response to the London talks has been cautious. The S&P 500 and Nasdaq saw slight gains, but the Dow slipped, reflecting investor anxiety. Memories of last year's tariff-driven market slump linger, keeping traders on edge. The World Bank has already cut its global growth forecast, citing trade uncertainty as a major drag. Analysts doubt a sweeping deal will emerge. Smaller, temporary agreements seem more likely. For now, markets are holding their breath, waiting for a clear signal from negotiators. The outcome could calm or rattle global markets in an instant. Beyond headlines and stock tickers, Main Street feels the impact most. Tariffs have already raised prices on everyday goods: electronics, clothing, auto parts. Small businesses reliant on Chinese imports are paralyzed by uncertainty, unable to plan or invest. One business owner put it simply, "We need answers ASAP to survive past this 90-day pause." Delayed orders and frozen hiring are now the norm, as communities brace for more disruption. These talks aren't just about numbers. They're about jobs, paychecks, and family budgets. The decisions in London will shape the economic reality for millions of Americans. As the summit ends, a critical deadline looms. The 90-day tariff pause expires July 8. Without a deal, tariffs snap back, reigniting the trade war and threatening global markets. Negotiators face three options: a breakthrough deal, an extension of the pause, or another delay. The most likely outcome? More time, not a final resolution. Meanwhile, businesses and consumers remain in limbo, awaiting clarity. The stakes are immense. Jobs, prices, and economic stability hang in the balance. Should the US keep up pressure for a long-term win, or seek compromise for immediate relief? As talks conclude, the answer is still uncertain, but the consequences will be felt for years.